Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Let's get talking about the big development which has taken place. The Insurance Laws Amendment Bill, which received the Union Cabinet's nod on Friday, has been introduced in the Lok Sabha today. This allows 100% FDI in the sector and much more. We have with us Thomas Devasia, who's the former member of non-life insurance at IRDAI, and Nilesh Sathe, who's the former member at IRDAI, to discuss more on this. Gentlemen, thank you very much for joining in and talking to us. Mr. Sathe, I'm going to start by talking to you about the FDI in insurance, which has now been, increased to 74%. There wasn't much of a change which took place when, the limit went from 49 to 74%. But now that it's risen to 100%, what is your sense in terms of the incremental foreign inflows in terms of deals that we could expect?
No, immediately, I don't expect incremental flows so soon, because all said and done, after the Act is amended, the regulations will have to be framed by IRDAI. That will take about 6 months, because 6 months is the time limit which is prescribed for IRDAI to frame regulations. So within 6 months, it should be done. And only thereafter, the things will be clear. Second is when it has been increased from 49 to 74% 5 years before. During these 5 years, not many foreign insurance companies have entered the market. Actually, not much of foreign inflow in capital has come. But again, that does not mean that with 100% it will not come. Actually, it has not come for many reasons. One is Indian partner was a must earlier. With 100%, now they don't have to search for Indian partner. They can start their own business at 100% FDI. So this is one big advantage. And as a result of which, there will be many insurance companies which have operations in many jurisdictions all over the world. They may think of tapping Indian market because India is a growing economy. So they would definitely like to tap market here. Penetration is low. The scope is more, the per capita income is going up. Hence, I expect in the next 5 to 7 years, there will be sizable amount of inflow into FDI, inflow of FDI into insurance. And at least 5 to 10 insurance companies should start their operations on 100% FDI.
Okay, all right. So you will see some more interest coming in from foreign companies now that the limit has been raised to 100%. But as you pointed out, it will take around 6 months for the regulator to formulate those rules and put all of this into execution as well. Take that point. Mr. Devasia, the other big point has been the capping of commissions that has come by for platforms. Do you think this is a structural change which could impact some of the other players, platform companies, something like a PB Fintech that is listed as well? But again, this is also a business that they have around insurance, right? It'll be positive for insurers, but do you think it's a big structural negative for some of the players in the industry?
Depending on what's the business mix. Okay, but capping of commissions is very much warranted in the entire distribution system because ultimately it's a cost to the consumer. And we cannot afford to see insurance premiums rising, especially in a context of very low penetration, very low disposable incomes with regard to the retail sector or the household sector. And also for the purposes of, the concerns that we have on global competitiveness of, manufacturing sector. So limits have to come in. While limits have been, released in a manner that there was only a global limit, there was no individual policy or line of product limit. So it's necessary, it will affect, but it's overall for the health of the industry.
Okay. Well, Mr. Sathe, I just wanted to actually put that question across to you with regards to the commissions as well. What is your sense in terms of the fact that there is this capping of commissions when it comes to platform companies? And what do you think would probably be the impact, say, if you had to discuss this 6 to 12 months from here on?
Yeah, again, in this also, there will be 6 months for coming out with regulations. This is number one. Second is, it is not that in the past, there was no ceiling on what commission rate you can pay on a variety of products. It was subsumed in expense of management regulations for reasons best known to IRDAI. But even at that point of time, I was of a view that that should not have been done, because the capping of commission, it ensures that nobody can exceed those limits. So why it was done, I don't know. But good, at least now there will be a capping. And probably now it may be product-wise capping, like for term insurance, it may be at 15%, 10%, whatever IRDA deems fit. Or for ULIPs, it may be 15%. For term, it may be 20%, whatever it is. But it is good that the capping will be there for commission. That will also help IRDA to check and control whether somebody is violating those. Because under any pretext or under any some different name, if at all the companies are paying to distributors something beyond what is prescribed, now that can be checked. And it is very good, because that will bring the cost also down, manufacturing cost of product also down, and it will help the customers ultimately.
Right.
So it's a good move.
Okay.
Positive move, in my opinion. To what extent the distributors may get impacted, time will tell, number one. But again, to what extent they should be given commission is also one area which was very vague in the past. Now it is good that it has been proposed.
Mr. Sathe, so it would ultimately, as you both pointed out, it would bring down the cost of product or cost of insurance down for consumers ultimately, and that will help penetrate the market a lot more, and it will be good for the consumers at the end of the day. Last question before we let you go, Mr. Devasia, I wanted to understand if you think government missed out on the opportunity of bringing composite insurance license. Do you think if that had come, it could have actually helped broaden the pie a lot more?
Oh, no, I doubt so much. See, composite insurers is basically, I believe it's more on the conceptual level, because finally there are very clear delineations with regard to how financial resources are managed, how governance happens. So composite is not so critical with regard to the expansion of the market. Yes, it will enable certain entities to have economies of scale by pulling in certain functions at a common level, while driving distribution also uniformly. But given the market that is open here, awaiting services, I believe composite insurers as such is not a game changer or something that will immediately trigger exponential growth. I believe the focus of the bill here is to address whatever is immediately required. And I can see that they have done a lot of cleanup in the legislation, including, clarifying definitions with regard to intermediaries, and they've also kept open any other line of business that, may be prescribed in the future. And they've created, general insurance, health insurance, reinsurance, and they've added this, point additionally into the amendments.
All right, gentlemen, we leave it on that note. Thanks very much for joining in and giving us all of your perspective with regards to the insurance bill. We need to actually turn our focus back to the markets, because there's a little bit of a recovery which has taken place from the day's low. The day's low, remember, stood at around 25,870. So we are 50 points off that day's low at around 25,920. So let's see whether there's any kind of formidable recovery that takes place. We'll take a short break, but up next we'll get you a lot more on the markets, a lot of stocks in focus. Stay tuned.